Well, we could be in for the long haul when it comes to the conflict in the Middle East, and the market is certainly paying attention. Another fall today, as we said, for the ASX, as investors try to forecast how it may play out for the local economy. In particular, oil prices, which, although shocks have been to a degree priced in, further rate cuts globally look off the table for now. And that's particularly an issue here in Australia, where before this conflict had even ramped up, we saw inflation becoming a problem. The RBA hiking rates just last month. Now with oil spiking and the flow through that has on petrol, input prices and therefore consumption, there is a real question mark now on what happens next. So to help us get some clarity around this, I was joined by David Bassanese, Chief Economist at Betashares, earlier today.
The surge in oil prices globally and the potential hit to business and consumer confidence is the worry at the moment. And, you know, I guess the big question is just how long will it last? I think the markets, at least up until recently, have been of a view that one way or the other, both sides probably do want to strike a deal. Like they don't want this to, both the Iranian regime and the Trump presidency, I think, would be negatively affected by a prolonged war. So maybe, you know, ultimately they'll come and strike a deal around the nuclear activity. But at the moment, it's a game of brinkmanship. You know, who's going to blink first? So, yeah, very uncertain environment. And obviously, the longer it goes on for, the higher the risk of, you know, unintended consequences and broader escalation.
Yeah, it's pretty tough if you're a central banker at the moment as well, particularly here in Australia where we're seeing hotter than expected inflation. You know, we've just had a rate hike before the conflict really ramped up. Now you're looking at this trade-off, I guess, between global growth and falls in global growth potentially from the escalation of this and also an inflation issue. How do you play it if you're a central banker?
Yeah, it's interesting. Like, I think in Australia, ordinarily central banks look at like an energy shock such as this and say it has mixed implications for the economy. On the one hand, you obviously get the direct hit to inflation from higher petrol prices, but you do get a potentially offsetting reduction in demand and non-energy inflation, if you like, if it does hurt consumer spending. But I think at the moment, given the economy does seem to be on a pretty solid footing in terms of GDP growth, inflation is above the RBA's target band. It has rebounded. The RBA, what I'm sensing from the commentary from them is that they are worrying more about the inflationary consequences here. So rather than thinking, oh, you know, we're going to stand pat here, it seems as if they are worried about the oil price spillover to inflation and, you know, on balance, making it maybe that they, you know, more inclined to raise rates as a result, which is a little bit different to what they normally do. Interesting in the United States as well, the markets have moved to price out some of the risk of rate cuts in the US. So they're looking at that higher oil price and worrying about the inflationary consequences more so than the downside growth consequences.
David, we don't really have any significant domestic data before the next meeting, before the next RBA meeting in a couple of weeks. Do you think they'll be inclined to move higher? Just seeing that GDP number earlier in the week, which was, you know, stronger than expected.
Yeah.
I know it's backward looking, but still stronger than expected. What do you think the RBA will do?
Look, I was a little bit surprised by the commentary from the governor just the other day, you know, saying that the meeting, I mean, I guess, you know, you don't want to rule out anything because, you know, what's the point of meeting if no one has any thought about doing anything? So I think she did keep the prospect of a March move alive. I'd be very surprised if they did go in March. Yes, the headline GDP number was stronger than expected, 0.8%, but domestic demand actually slowed from Q3, albeit it was very strong in Q3. Total domestic demand grew by 1.3% in the September quarter. It slowed to 0.5% in the December quarter. And what boosted GDP was the inventory rebound. So, and consumer spending within the numbers was quite soft. So I wouldn't see that GDP numbers as giving them a sort of a smoking gun to raise rates in March. I still think they will wait to the May policy meeting and wait for that all-important March quarter CPI that we get in late April. But definitely it's not a zero probability, but I'd be very surprised if they did go at the March meeting.
We know the RBA is independent to government. We've got to make that clear. But, you know, the May meeting is a couple of weeks before budget. You know, right now you've got the tension in the Middle East. It seems quite easy to blame that and Trump for a rate hike. Do you think that plays in at all?
I think they're probably happy it's a couple of weeks before the budget, not... Did you say before the budget?
Yes.
I think anything around the budget would be obviously problematic. I mean, they try to avoid being too political or intervening in the political process, if you like. But look, it is what it is. At the end of the day, we get an important inflation reading at the end of April. The big debate is how much of that lift in inflation last year was a more persistent demand-related effect, or were there one-off effects? And that March quarter number is going to help decide that. And so if it does turn out that inflation is higher than expected, the RBA will raise rates. And in fact, most famously recently, they did raise rates right in the middle of an election campaign. So if the circumstances require, it's beholden on the RBA to definitely move. So again, I don't see the case to go in March because it avoids, passing judgment on the budget and not avoiding a rate rise in May. I don't think that would be the case.
And David, we see you're in Canberra there. We know you've been at a roundtable with the Treasurer, with a bunch of economists, talking about the economy, talking about, I guess, what's coming up with the budget, or at least giving your views. I know you can't probably talk about much, but what would you like to see? I mean, what are some of the key issues you think are facing Australia, particularly with the budget coming up in a couple of months?
Yeah, it was good. It was great to have that opportunity to sit around the table with a bunch of other economists and the Treasurer and the Secretary of the Treasury. So I was very thankful for that opportunity. I mean, I did unload my 2 cents worth. I mean, I think in terms of housing, I was really promoting the idea of regional development. I think we're very highly urbanised. The big problem with house prices relative to income in Australia is that so many of us need to cram into the major capital cities for work. And if we could have a more decentralised economy, a bit more like the United States, house prices on average relative to income wouldn't be as high as they were. So that was one of the things I thought, was interesting. I also like the idea of looking at new ways to tax, to raise taxation, maybe looking at the electronic transactions as a easier, simpler way of maybe raising revenue rather than relying on the old style consumption taxes and even income taxes. So a couple of left wing, not left wing, but left sort of out there ideas just to think beyond the usual things that everybody talks around the table. But a lot of talk about productivity, a lot of talk about maybe getting government spending down a little bit still. It's still probably higher than people generally would like, and so we need to tighten the reins a little bit in where we're spending, and you make sure we're spending money in the most efficient manner possible and try to boost productivity. And a lot of optimism, I think, around the table about what AI might deliver in terms of productivity going forward as well.
Yeah, productivity in the name of the game at the moment. David Bassanese, appreciate your time. Thank you so much for joining us on the program.
No worries. Thank you.